my community.
And you are prompt.
We're live right now.
Hey, hey.
We are live. So, before we introduce today's guest, this is Talk Money Tuesday podcast. In real time, I'm going to text my community, and let them know what's going on. And if you're not getting the text messages, it's because you're not in the community. So you need to be in the community. Um, and on Talk Money Tuesday, we like to talk about money and have real conversations, real practical conversations. Bring guests on who are specialists in financial literacy, different strategies that are making money, and then give you guys information like in real time that you could take and implement and execute like in the next 30 to 60 days. Because I've read a lot of books and I've been in different programs and I've had coaches myself, and it's like you get information, but you're still in the same spot. You got new information, but you're not making new moves.
No
right?
implementation.
So, exactly. So this show's about giving you the knowledge and the information, but then at the same time, giving you some practical stuff that you can literally bust a move tomorrow, if you needed to, right? Like make a move right now. And today's guest, I'm excited to be on. I follow her on social media, and the messaging that she puts out is something that I'm very much attracted to. So I'm very blessed, honored, and thankful to have her on the show. We're talking to Shaniqua Nicole, and she is the Millennial Money Maven, tax and wealth specialist, and a strategist as well. So I'm trying to get all the strategy. I brought her on so y'all can get the strategy, y'all can get the drip. Welcome to Talk Money Tuesday. I'm excited to have you.
Yes, sir. Thank you so much, King. I appreciate you for bringing me on. I'm excited to be here.
It's gonna be great. We're gonna have fun. Before we begin, people are just coming in, so I'll give them a little time to come in. This podcast is sponsored by Paperloaf, right? It's one of our sponsors. If you're looking to get your credit situation right, I think next year there should be no reason why everyone's not over 700. You should have absolutely no reason. There's so much value out there. There's so much information available. And if for some reason you just don't understand what's going on, tap into Paperloaf because they will get your situation right. And you need to be over 7 so you can start leveraging and taking advantage of opportunities. Can you do opportunities under 7? Sure. You can get something for 680, 675. You still bust some moves, but you don't have to be that way. So tap into paperloaf.com, follow them on Instagram, _paperloaf_, and get that information. So, Shaniqua, welcome to the show.
Yes, sir. What's going on?
I know a lot of people are like, can I win a trip to Vegas? What's going on with that? So we'll get into all of that. But
Yes.
I wanted to bring you on because, like I said, I'm very attracted to the messaging that you put out there. And taxes is a subject that intimidates a lot of people. It's a subject that people avoid. I've definitely had some times where I've avoided it 100%.
Listen.
You know what I mean? So I feel like we all kind of been there. And, today I'm hoping that not only can you give some strategies on how people should actually start looking at and handling their taxes, but on the other end, what are ways that they could save money and like take advantage of opportunities that they may not even know exist. So
Right.
welcome to the pod and let's get it popping.
Yes. Thank you. Yes, thank you so much. No, that's super key because the tax code is literally written for business owners, right? So here's the secret. The government wants to incentivize us to do things that they don't want us to do. Okay.
Wait. Hold on. Say that again.
The government incentivizes people, right? They incentivize the country. It incentivizes its citizens. This is every single government. They incentivize us to do things that they don't want to do. So they don't want to have to create all the jobs. They don't want to have to create housing, right? All these things that they don't want to do. They don't want to have to clean the air from the pollution that they're creating. So what do they do?
What do they want to do besides collect money? They ain't doing nothing.
Well, that is in question, right? Well, that we shall see. But when you figure out the things that they don't want to do, that's where you can create the quickest arbitrage for yourself in understanding what they don't want to do, so you can take that off their hands. And the number one thing is creating jobs. So that's why small business owners are so important to the government and to our country, because number one, we're taxpayers, and number two, we create jobs and opportunity for the country. So the tax laws are specifically written to entrepreneurs, business owners, and real estate professionals.
Okay, so the tax laws are written for business owners, entrepreneurs, and what was the last one?
Real estate. People that invest in real estate investors. Yeah.
So, okay. So if you're a 9-to-5er, if you just work corporate, you got a regular job, you're telling me the taxes, the tax code are already working against me.
Already.
So then how would I, or how would someone watching or listening, how would they take advantage of position themselves in an environment that's not even set up for them to thrive when it comes to them keeping their money and multiplying their money?
Absolutely. So let me tell you something. When you are a W-2 employee, you're literally paying the highest tax rate of anybody else in the country, right? Number one, they're taxing you every 2 weeks. If you opt out, they taxing you on the end, they're giving you penalties, right? So the quickest way to create arbitrage for yourself is by starting an at-home business. So if you start an at-home business, you start a blog, you start coaching, then you can now start turning some of these living expenses that you have into business expenses. So that's really the quickest way. And honestly, I'm going to tell you this was before, I've been in the tax space for 15 years, right? But when I was working and first learning about paying taxes, I started my career at Merrill Lynch. And so I went into investments. Taxes really wasn't my thing at the time. I just felt like taxes was boring. But what got me interested in taxes is when I was making about $60,000 on a job. I was in my early 20s and I saw how much taxes I was paying. Didn't have any children, right? Didn't have any tax write-offs. I'm like, whew, this is ugly. You're paying at least $12,000 in taxes if you're making $60,000 a year. Okay. What could you do with an additional $12,000, right? What do you have to do in your job to make an additional $12,000? So when I started my tax business and I started learning and understanding the tax code, I actually started to get a little refund back when I was doing my taxes at the end of the year. So for me, that's when the light bulb went off. Like, okay, now this is something I need to teach, and this is something I need to study and master. And so I've just loved taxes ever since I was like 20 years old.
So hold on, we got a couple of questions. So, Ty, I see Ty's on here, Fox is on here, Maya's on here. If you guys have any questions, definitely tap in. I just got a text.
What's up, Ty?
Just got a text real quick. Let me see. Okay, so I actually got a text from someone, and they were asking, what should they claim on their taxes? Like is it? I guess I have to just kind of decipher it. Does it make? I guess this is what she's saying. Does it make sense for them to claim taxes or not claim? Like what's a better position for someone?
So she's probably, let's say you're an employee and you work a W-2 job. Every year you have to fill out the W-4, right? So they've actually made the W-4. First of all, nobody even understood the W-4 before they changed it 2 years ago. And now they made it more complicated, okay? So they want to continue to confuse you into doing nothing, right? So they want to make it seem like this stuff is rocket science, this stuff is hard. Accounting is not rocket science. That's why it's called accounting, right? It's actually very methodical. And when you know the rules, then you can play by the rules. But when you are a W-2 employee, you have to fill out that W-4 every year. And honestly, especially if you have a second job, you want to be at zero. So typically I was always at zero, and then I would just let them take the max out of my check, right? And the reason that you want to do that is because you don't want to be at the end of the year and then owe taxes unless you're okay with that. So it really depends on your personal strategy. So if you're okay owing a little bit when it comes time for taxes, cool, go that route. And maybe I wouldn't say go tax exempt, because a lot of people don't even really understand how much taxes that they're paying out of their paycheck. But, maybe you want to put 4 on there and then just test it out throughout the year. You can actually change your exemptions at any time through the year. So you go to your HR department, and it's normally at the click of a button, but maybe you have to fill out a paperwork, sign it, and get it sent up to HR. and then you should be fine. But yeah, I would say stick to zero unless you are good at saving money, because you could possibly look at owing, right? And a lot of people that have two jobs. So if you have two part-time jobs, right? Kind of sometimes those people find themselves owing taxes because they don't pay enough, right? So you might have one job that pays you 50,000 a year, one job that pays you 20,000 a year. Now you're making 70,000 total for the year. You're in a whole different tax bracket than 50,000, right? So each one of those paychecks is only taxing you like you're making that amount full time. So a lot of people that work two jobs kind of get caught up in that they're not paying enough taxes. So if that's you, make sure that you keep your exemptions at zero. And I mean, to be honest, you know, in my mid 20s, I was paying $50 extra. So if you are typically a person that owes, you can also elect on your W-4 to pay extra, because I just didn't like sending them more money. You know,
Yeah.
at the end of the year when I was working my job, I didn't want to send more money. Y'all already taxing me every week. And when I file my taxes, I have to pay you guys. Oh no, y'all just take your extra $50 a paycheck. And then if I get a refund later, cool.
So that was great information, by the way. I have a couple of questions I want to ask you.
Yeah.
But we have some questions from the people live, because this
Oh,
shows
look,
about,
y'all coming already.
this
Let's
shows
go.
about live practical information, and I want the guests to get the drip on real time. So Fox asks, let me see. He says, what if work while also doing, okay, he said, what if he works also doing crypto in stock?
Ooh.
How should he go about setting up his taxes? So he's working a steady job,
right,
also investing in stocks and also investing in crypto. So what's
Yeah,
a good
so here-
what's a good setup play for him?
right. So this is the thing, right? A lot of new investors, number one, you don't understand taxes, period. You don't even understand how taxes work on your W-2 job, right? So if you are investing in anything, right? What if you have a business, if you have real estate, whatever, any kind of income that you make, you need to understand that you're gonna be taxed on it. So now you have to understand, when do you have a taxable event? You know, a lot of people think that they put money into their brokerage account, and as long as they don't take it out, it's not being taxed. That's not how it works. You put money into these Forex brokerage accounts or your stock brokerage accounts. Now you're trading options and you make 50,000. I had a client last year made 85,000 in a regular brokerage account. Well, guess what? Now you owe like 35,000 on that, because those are short-term gains. So they're taxed higher than they would be taxed if you held them for over a year, right? So you definitely want to sit down and talk to somebody that can help you through your strategy, because I don't know how you're trading, but if you're actively trading but you're not qualified as an active trader, right? And that's another hack, and it's something that you might want to learn about, because you can get full-time trader status, but there are requirements for that. And once you do become a full-time trader, then you'll be able to deduct your internet, your education. You know, you'd be able to deduct expenses as if your trading is your business. But since you have a full-time job, I'm going to assume that this is not what you do full time, right? But let me tell you the quickest hack, right? So what you need to understand and what you have to do when it comes to your finances, trading, investing, whatever, you have to decide what money is short-term money and what money is long-term money, right? Because let's just say now where you are, you're up $100,000 in your current brokerage account, right? If you continue to trade, you turn that 100,000 into $1 million. Now you're paying 35% taxes on that, right? Short-term gain, capital taxes. And there's ways that you can avoid it. So one way that you can avoid it is by choosing for that to be for the account that you trade in to be your long-term holding account. So if you open up an IRA, you can trade in your IRA. All of your transactions that you do in your IRA are going to be non-taxable, right? You're not creating a taxable event. You can open up a 401k if you're self-employed. If you're not self-employed, start a small business, right? Everybody does consulting at this point. Everybody does Uber. Everybody does something.
Hey, hold on. I got a question.
What's up?
So someone like him,
yeah,
he could start another business right? Be a investor or trading consultant or just consult whatever.
Consultant, business
Just
consultant.
consulting.
Mm-hmm.
And he can use that to leverage and run that through, and then that would help him with the tax situation.
So that will help him with his taxes for sure, because number one, he can start to take some of those lifestyle expenses, cable, rent, internet, travel. Now you can start to use some of those for business purposes once you're properly structured, right? Number two, you can start to gain business credit. And then number three, you can now open up a 401k for a set 401k. So if you open up a self-employed 401k, you can put like $60,000 in there a year.
Damn.
Right? It can. I would personally say, if you're trying to run it up, open up a Roth account, right? So put the money in Roth, so it's after tax now, and any of your earnings that you make are going to be tax free in the future. So we hear Jay-Z and all these people talk about their, the accountants have them living tax free. That comes from planning now and taking the action that you need to take so that you're not going to be taxed forever on the same amount of money.
That was heat. That was some heat right there. Fox, I hope you're still on here.
Yes, get you a Roth. A lot of people don't know. Now, I don't know where you can trade crypto and stuff like that on the Roth side. I haven't looked into it. But if you're trading options, open up an IRA, right? You have limits. You can only put $6,000 a year in. But here's the thing. Right now, we're in 2021. So you can put in $6,000 for 2021, and then you can also put in $6,000 for 2022 once the year comes in, right? Once the new year comes in. So you can literally take $12,000, put it in your Roth IRA, and then turn that into $1 million. You won't have to pay any taxes on it when you use that for your retirement. So talk to someone that can help you strategize, especially if you don't need all the money now.
Fire. Again, like that was crazy. To think that, if you're casually investing or if you're full-time investing, that you could start a company, be a consultant, leverage that, and then shelter yourself from that such a high taxable event is nuts. So we got some more questions. So Ty asks, what's the best way to go about getting your LLC, but you want to have it inside of a trust?
Yeah. So listen, when you start any LLC, it's essentially the owner is really made through the contract, right? Or through your operating agreement. So in your operating agreement, which is the contract between the owner and the company, you literally say the owner of this company is my ABC trust. That's it. Like, it's not hard to do at all. The hardest part is probably getting your trust set up, but it sounds like she's already, good. And honestly, that is one of the strategies that I help my higher earning, higher income clients, right? Is with structuring. So really what you want to do is you want to have a trust at the top of your structure, and then you want to have 3 LLCs. So you have 2. One is going to be an operating LLC where you actually operating business. One is going to be like a family office management LLC where all the family business is handled. And then you're also going to have one where your real estate and your assets are going to be held, right? Yeah. And the reason that you do that is for liability purposes. So LLC is limited liability. And what you want to do is limit any liability that you have, especially from your assets. So that's a key structure if you're looking, to really build out your estate and wealth building plan.
Again, I hope you guys are paying attention and writing notes, because this is some crazy fire information. She has a follow-up question. Is there a way to save on taxes when you work from home 3 days a week? How would you write that off?
Well, yeah. So if your company was, so there are several things. On one end, it used to be, right? So we just had the Tax Cuts and Jobs Act. And what that did was increase the individual exemption. All right. So it kind of forces people to take the standard deduction versus your normal deductions. And normally, if you would work from home, you would claim your at-home expenses. and just write them off as an employee expense, as an expense that you incur as an employee to the job that you hold, right? But because the deduction is so high, the exemption is so high now, it kind of pushes you into just using that standard deduction. But if you have real estate, other things like that, if you invest in your IRA, you have high medical bills, right? If you have other things that are going to push your deductions higher, then you might want to itemize versus taking the standard deduction. But literally it's the same play, y'all. Like, it's not hard. Start a consulting business, right? Start your at-home business. Document your expenses. At the end of the day, your business is an actual business if the expenses that you can claim need to be regular, right? So they need to be regular expenses. They can't be lavish. They need to be necessary for your business and ordinary, right? So whatever your business is, let's say it's consulting, then ordinary expenses is going to really, really vary. But let's say you are a cosmetologist, ordinary expenses for a cosmetologist is going to be totally different from ordinary expenses for, let's say, a lawyer or a consultant, right? So a cosmetologist can write off shampoo. You ain't gonna be able to write off shampoo as a consultant, So you just want to figure out. Really, what I tell people is, I know it sounds very cliche, but when people say do what you love and you don't have to work a day in your life, number one, because it's going to help you with the tax write-offs, right? Do what you love, even if it's on a part-time. And as long as you're operating for income and for revenue purposes, then you are still considered a legitimate business, even without an LLC.
Crazy. I know I'm gonna have to get with you for sure. I already know that in advance. So if you guys are watching this, definitely tap in to the Money Maven Club. You can see the app right there on the screen. Tap in, follow her, get this drip. I mean, we got so much more left in the show, but I just want to make sure that you guys get intimate. You know, if there's other things that you want to see that she's offers and other questions, there's probably information on the page already. So make sure you guys follow her. Okay, a couple more questions we got. All right. So someone asks, should they start a business now or wait till the new year? And if they have already been spending money for a business that they haven't started, what should they do about that?
Right. So just like I just mentioned, as long as you are in the process of starting your business, right? As long as you are in the process of working for profit and revenue, then you can start to claim your business expenses, right? And especially if you have a W-2 job, that puts you in a very powerful position because you're already paying taxes, right? Like I said, I was paying taxes out of my paycheck every single 2 weeks. Once I started my business, I was getting a refund back because of the money that I was investing in my business will offset your personal income, right? And it brings down your taxable income. So now you could possibly get a refund if you're taking that money out of your paycheck. But yeah, what a lot of people miss, especially new business owners, they don't even know. The government literally pays you to start a new business, right? This is called research and development. And like I said, they will incentivize you to do the things that they don't want to do, right? So they don't want to spend a whole lot of money doing research. They don't want to spend a whole lot of money trying to figure things out, right? So they will pay you, they will give you a credit. It's a tax credit called research and development, R&D credit. So possibly you may be able to qualify for an R&D credit depending on where your business is, how much you make, how much you spent, etc. But at the very least, even if you're not an LLC, you can still claim some business expenses that are properly documented on your Schedule C as a sole proprietor, even before you get your LLC. So number one thing you want to do, keep all of your receipts. And as long as they're ordinary and necessary to generate revenue in your business, then you should be able to claim them on your tax return.
That's a great question. So, a great answer. So, somebody asked me the other day. I'm not a tax person, so I kind of refer her to someone else. But now I'm gonna refer them to you. But should somebody? Because she was asking me, she was like, "Well, it's November right now. Should I just wait till January to start my LLC?" Or should
Yeah,
I
no.
start it
I
now?
mean, it really doesn't matter, right? At the end of the day, your LLC is not that has nothing to do with taxes, to be honest, right? Your LLC is for limited liability. That's what it does, and it only holds you over in your state that you register the business in. So from a tax perspective, when you do start an LLC, you're actually taxed the same as a sole proprietor, unless you elect for S corporation
Yeah,
status.
I know that.
But the average entrepreneur, they're going to start their LLC, get their EIN number, and they're going to be done. You know, so you are actually taxed the same with or without your LLC form. So I would say go ahead and start it. If you want to wait, you can, but honestly, why wait? It's a couple $100s in most states. I know you're in California; it's a little expensive out there
It's
to
like
start.
$800 over here.
800,
Yeah.
right? So, let me tell you, I own so many LLCs because there's so much that you can do, especially, from a leverage perspective, right? So
Yeah.
you get tax credits, you get business credit, right? And then you have, like I said, you have some just for holding companies. And yeah, and it's only $100 here in Georgia. So
Yeah.
if
So,
it's expensive, I would say maybe wait, because then you do have to renew it. So if you started now and your renewal is in January, then you're gonna have to pay both. So maybe just wait if you're in California until the new year so that you can, you don't have to pay that twice.
they could potentially get it in a different state and have a registered agent to save money.
Yeah,
Yeah,
absolutely.
because that's a good option. I mean, you don't necessarily have to do it in the state that you're in. I think getting it is the most important thing.
Yes.
The registered agent is going to be an additional cost, but if it still comes out cheaper than what you would pay just for the LLC, like me, mine is in Massachusetts where I'm from. I live in California now. But when I start my newest LLC, I'm not going to do it in California because it's $800. It's like,
It's too
why?
much.
Yeah,
And you
it doesn't even
know,
make sense.
you have the taxes are high in California, state taxes are high, everything is
Exactly.
high in California. So
Exactly.
yeah, you don't want to do
I
that.
kind of answered my asked that question. She was like, yeah, yeah, yeah. I didn't even know you asked that, but yeah, that's the question right there. Okay, so one of the things that you touched on, I think is super important, and I kind of want to elaborate on that, right? So you was talking about opening up the LLC and then setting it up as an S corp, right? For prudent tax purposes. But to
Mm-hmm.
kind of expound on that, what is a proper account setup
Yeah.
for banking purposes? So now I have my LLC. Shaniqua told me, you know what, I need to make it an S corp. Boom. Okay, we have that designation, that's set up. How should I then go if I'm going to get a Chase account or Bank of America or credit union or whatever?
Yeah.
How should my accounts be set up so I can operate and document properly?
Got you. Yeah, no, that's a great question. So personally, I think you need at least 3 accounts, right? So I would say you have your main business account. These are business accounts. But the first thing that you need to know is that if you don't have a business bank account, then you're not in business, right? So literally your business bank account establishes like the start of your business. Even if your LLC says January 1st and you didn't open a business account till June, you're really not documented until June, right? Because your EIN number hasn't been used anywhere. Like I said, your LLC is just for your state. And your EIN is federal, and that is what connects you in the systems of the financial world. So you want to make sure that you, number one, get a bank account ASAP. As soon as you get your EIN number, go to the bank, get your bank account set up. Now, once you get to creating revenue and you're trying to be a studious entrepreneur, you want to have an operating account. That's going to be essentially where you pay all your bills from, all your recurring stuff comes from there. You might want to have a payroll account, which is going to be separate. So if you use something like a QuickBooks will do your payroll for you. But what a lot of people miss is that QuickBooks they don't take out the payroll taxes, right? So let's say your payroll for the week was $5,000. And in that 5,000, 500 of it is supposed to go to payroll taxes. So they paid out 4,500, right? So they took the 4,500, they took the net. So they took the net 4,500, paid it out to your team, whoever's on your payroll, and in your bank account they left the other 500, right? So a lot of people miss that you still have that 500 in your bank account, and it really needs to go to the state and the federal government so that you can pay your payroll taxes. So I advise that you have a whole separate account for payroll, so that way you can know, look, my monthly or weekly payroll is $5,000. I'm going to put $5,000 in here, every time, it's time to run payroll. You just set up that automatic transfer so that the gross amount gets there. And that way, if you are left with the net, then you do have it and you can send it when it's time to send it off. Let me tell you something. The states have time. So like the state governments, California, Georgia, New Jersey, they don't play about collecting their state taxes. They're not like the IRS. The IRS will let you get a payment plan. The state will come knocking on your door and put a lien on your business if you're not properly paying your payroll taxes. The IRS is a little more lenient. So you definitely want to make sure you have a payroll account, your operating account, and then just your regular tax account. And typically in your tax account, you want to take 20% of your profits and just put it away for taxes, so that whether you pay quarterly or annually, you'll have that money put away for you.
So you mentioned operating payroll, and then what would the third one be?
Your tax account.
Tax. Okay.
Your federal tax.
Well, I hope you guys have that. You set up your LLC. You set up as an S corp if it makes sense for you, and then
and I could expound on that a little bit.
Yeah. Would you?
Yeah. So normally I recommend that an S corp typically makes sense if you're netting at least $50,000 a year, right? So let's say you make 100 and you spend 100. It's probably not time for you to be an S corp, right? You make 100 and you spend 50, you got 50 left. Then maybe it's time for us to talk about you opening up an S corp. But the reason that I say that is because it's just a lot more management, a lot more compliance, and typically, when you're over that $50,000 threshold, at least net, you're just a little more organized in business. So it's not something that everybody should do right away, because it can come with fines and stuff like that if you're not in compliance.
So you can set it up later. So you can set up your LLC now.
Yeah.
And then,
and
get
you
your
can
numbers
become an
up.
S corp down the line whenever it makes sense.
Yep, that's what I was gonna say. So someone in a business and they're setting up accounts, they're asking, this is one of the questions. Should I do, what type of institution should I work with financially? So should it be a large bank, a small bank, credit union?
Yeah.
What's the better situation?
Listen, get them all. The more the merrier. Your smaller banks sometimes are less risky, or they don't take high risk clients, right? So maybe you want to go to a credit union, because credit unions are about the community and they're going to give you higher credit limits. But maybe like a Wells Fargo or Chase. Honestly, Chase is good. Chase is good for business. They have a really big business initiative. So if you're looking for business credit,
they got good business credit too.
Huh?
I was gonna say they have their business credit is pretty good.
Yeah, they give good limits on business credit. I would say Navy Federal, if you can get into Navy Federal, any one of the federal credit unions, they're always good. Penn Federal, Navy Federal, they're always good to have. I do like Chase. I personally bank with local credit unions for my business. They're just more friendly, and the other banks are just out for profit, to be honest.
And I want to give a quick tip, because I would agree Navy Federal is a good bank to work with, good credit union to work with. You don't necessarily have to be in military to get access to them. Yeah. So if you got a friend or cousin, they can give you access to their PIN number, and then you can use that PIN number when you go set up an account, and they will allow you to set it up. To me, because I saw this on 2 different occasions, they may want the address to be the same that the mail is going to go to, and you can do that, but it's virtual, so you can just pay. You can do paperless, so it doesn't really matter at that point. But you don't have to be, in the military to get access to it. You can just literally get access to it. If somebody currently has an account, just get access to their PIN number if they will be so kind.
And it's not like their PIN number to their debit card. It's
exactly
the bank gives them. Just like your person number or whatever. Yeah.
So I heard a lot about tax strategies by leveraging and utilizing insurance contracts, right? Based on how the tax code is written. So, would you mind sharing some of that information?
Yeah.
You got your money right now.
Yeah.
I got some money to play around with.
Yeah.
I don't want them to take all my money. So,
Mhm.
what are different ways I can use different tools available to shelter?
Yeah, so this is actually like a part of my specialty knowledge that I have from just working in the retirement space my entire career. So, like I said, I started my career on Wall Street, and I was working in Merrill Lynch in institutional investments, and we were managing 401k plans, defined contribution plans. So, essentially, what I learned is that a defined contribution plan is essentially life insurance, right? So the companies, right, like the Merrill Lynch's, what we would do is um, people's people's companies would pull together their money, bring them into one place, and then us as a financial institution, we would invest in different life insurance policies, right? And then what happens is once that person goes to retire, now they can draw from that, right? This is also how pensions are funded. This is how pensions have been set up for hundreds of years. But as you can imagine, it gets super expensive for the corporations to do it. So that's why pensions are no longer around. But you can literally set up a pension, or people like to call it infinite banking.
Yep, yep.
You can set this up for yourself as well, right? So I like to call it the millennial retirement plan.
I like that. I like that.
Because look, or we could call it the millennial pension plan, right? Because pensions are no longer around for us, and as much as the other generations want to want to poop on millennials, we have to get it out the mud. We have to figure this stuff out that the corporations have the secrets to, right? They've been doing this stuff for hundreds of years, and if I wasn't working behind the scenes, I would never know about it. So essentially, right, there are two ways that you can do this, and it's essentially the concept of defined contribution. I mean, deferred compensation. I'm sorry, right? So, as as a CEO, as an owner of a business, you can take a salary, right? Your salary just needs to be reasonable. But here's the thing that you'll learn is when you start to get into taxes, earned income is the highest tax income. So I don't care if you work a W-2 job or you work a W-2 from your business, your W-2 is still taxed the same across the board, right? That's just earned income, because earned income is taxed the highest. So what you have to learn how to do is you have to learn how to take your currently earned income and turn that into some kind of investment, dividends, loans, or something for yourself in the future. And one way you can do that through insurance is called deferred compensation. So instead of you taking your salary now, let's say as a CEO, you should be earning $150,000. You have $1 million business, and you should be paying yourself a reasonable salary of $150,000. But you only need $50,000 to live off of. So now you can take this $100,000 that you have liquid, put it into an insurance policy, right? You're not going to use this insurance policy. You don't need it right now. You're going to put it away. But what that insurance policy is going to do for you in the future, number one, it's going to grow at a protected rate, right? So what happens if you put money, $100,000 into the stock market? It can go up, it can go down, depending on whatever the market's doing. When you put money into an insurance policy, it can only go up, right? Or stay the same. It is not going to decrease. But the way that these policies are set up now is that they are tracked to the market. So you do get the upticks of the market, and you can, it can increase for you, but you also have a floor, so you won't lose, right?
Yeah, yeah.
So while the market might be doing 20%, maybe you're capped at 14% or something like that in your insurance policy. But the great thing is that the minimum, right, you'll typically have a floor of like 1 or 2%. So what if the market tanks, right? What if this is 20 years down the line, you're trying to retire and the market tanks? And we have a repeat of 2 years ago. If the market goes down 40% and you had 100,000 in there, now you're only looking at 60,000. Versus if you had, or let's say you had $1 million. Let's say you had $1 million in there. That million turned to 600 real quick if it's in the stock market. Now, if you have that money in a cash value insurance policy, what that does for you is, number one, it's protected. Number two, if you die, it goes to your family regardless, right?
Yeah.
And it's also tax-free money that goes to your family versus if you have it in a stock account, they have to, it has to be transferred, all that kind of stuff. It goes through probate unless it's owned by your trust. So that's a whole nother topic.
That's
But
heavy. That's heavy drip though, right there. I
yeah,
know
no,
about
it's a
that.
lot.
Yeah.
It's very detailed, but that's literally how you can, you put the money in, you let it sit, and then essentially what you do 20, 30 years down the line is you start to take withdrawals or loans. They're going to be set up as loans from the policy. And here's the thing about loans, right? Loans are not income. Loans are not taxable. And guess what? You're taking a loan from yourself. Some people don't understand, why would I borrow my own money? Because it is your money and you're going to pay yourself back interest, right? The interest is going to you.
Man, it's so crazy. Okay. So I just want to make sure you guys are paying attention. So, all right, you have this set up, right? Let's say you have this set up. And now, like the money Maven was telling us, you got to set up. Now you're borrowing against yourself. So that means you don't have your credit score doesn't matter.
Don't need credit.
Your current income doesn't matter. So you might not even have no income because
you don't have to show tax returns.
You don't have to show tax returns, and you can borrow money that's gaining on compound interest, and then take your money and invest that into something else, or maybe your grandson or granddaughter wants to go to college. You want to contribute.
I have a better one for you, and I call this the $1 million baby, right?
Well,
you can literally turn your child under 2 years old into a millionaire in their retirement by investing only $200 a month. $200 a month, properly structured into one of these insurance policies. You can turn your child into a millionaire, $1 million baby. I call this $1 million baby. Literally $200 a month. I set this up for families all the time.
So that's what, 20 years when they're 20, 21, they'll have that? Or like what's the time frame?
Yeah. So you want to keep it. So literally you keep the policy forever. So how I structure it though is that either you're going to pay into it for 20 years or you're going to pay into it for 30 years, right? And then that's it. Then you stop. The money's going to continue to grow with the market. And what happens, right? So the Bible says that a good man saves for his children's children, right? So this is how you can literally lock in your legacy for generations beyond just you and beyond just your children. So when you structure these policies properly, your child will be a millionaire in their 30s, right? So let's say they graduated college, they're ready to start their family, they got a scholarship to college, or they didn't even go to college route. And they're ready to start their business. They need a $300,000 investment, right? Well, guess what? They don't have to go to the bank. They don't need credit, right? You ever try to get $300,000 loan from the bank?
It's tough. It's tough. I got two questions for you.
Yes.
Question number one: what if you're someone like me? I don't have no kids yet. Is there a $1 million baby plan I could set up for that future kid?
Or you have a baby?
Yeah. So that's question one.
Yeah. You can set up the insurance policy that's, it's in your name. When you die, they're going to be your heir and your beneficiary regardless. And meanwhile, it's still building up that cash value, but that can in your mind. So here's the thing. You can have as many insurance policies as your income allows, right? So there is a maximum that you can qualify for, but as you continue to earn more money and, grow in your income producing years, you can add on more policies. You can have as many policies as you want. You can have an insurance policy for each business entity that you have, right? Business owners use insurance. Like I said, we can use the deferred compensation idea of instead of you taking $100,000 in compensation this year, you're deferring that comp into your insurance policy. So you can have as many insurance policies as your life and businesses will account for.
And I want to double down on that one. So what the Money Maven is saying is extremely important because a lot of us don't even have insurance set up on our lives in general. You got insurance on your phone. You might have rental insurance. You got car insurance. You might get travel insurance. You might get hotel insurance. You got credit card insurance. But we're just not in the mindset or program to believe that this
Insurance is
vessel that
important.
we have, this life that we have, should be insured. So that's number one. You should just have that. If you don't have that, you have the means. Even if you don't have the investment means, you should
Listen,
just look at some
$20
term.
a month.
Yeah, I was gonna say you could just look at some term just to be
Listen,
covered.
just be covered. For
And then
some
beyond
reason,
that,
it's so taboo in our
yeah,
community to talk about insurance. My grandmother,
insurance
literally,
and wealth, insurance and money for sure.
yeah, and you know, you hear all these rich white men talk about how, you know, you buy term and invest the difference. Listen, Linda, when you are a first generation curse breaker and generational wealth builder, you have to protect all of your bases. So don't listen to a millionaire, billionaire man, you know, white man that has never lived your life and didn't come from, you know, didn't come from where you come from. Don't listen to someone like that who cannot speak to where you come from and where you are, because he has no idea, right? So you need to make sure that you cover your entire life today, okay? Because here's the thing. Most people only think about insurance when they need it.
Yeah, that's the thing.
And
That's
at
the
that
thing.
point, it's too late.
Yep, that's the thing. So the other question I was going to ask you was, hold on, let me make sure because you kind of took me off when you said some stuff. let me get back in my bag real quick. So we was talking about the pre-situation, and then the other one, damn, I forgot. It's cool because we got a question. It's gonna come back. We got a question. All right. So Reem Bright says, other than investing, if I don't want to keep my money, and I think you might have touched on this as well, because insurance, I think, might help him with this. If he doesn't want to keep his money in a regular savings account, which won't grow much, where's another place to keep it? So the insurance is a great option for
insurance
you.
Insurance is cool, but I think he said if he doesn't invest much.
Yeah, he said other than investing.
Okay, other than investing, I'm assuming in like the stock market. I honestly, I said the stock market, right? A lot of people make the stock market to be this big monstrous thing, but you can invest in ETFs, right? Yeah, you can invest in the S&P 500. Like it can be the road to $1 million is so simple. It's literally being disciplined and being repetitious, right? So having your plan, sticking to it. Like there's literally your $1 million, your $1 million net worth is literally just a calculation away, right? So figure out what that number is and stick to it. Pay yourself first and, you know, put it in an index fund. You can do insurance as well, right? Because insurance is like a guarantee too. You know, I don't understand why people wouldn't take $100 a month to get 500,000. You know, I don't get why they wouldn't do that. It's like a guaranteed investment. You'd rather be out here gambling on options than to take a guaranteed payout. But I digress on that.
So I remember now. So you was talking about $1 million baby. So okay. Do you run ads at all for your products and services?
For insurance?
No,
not much. General. I do run ads. I run ads.
Okay. So the reason why I asked is because I feel like obviously you and I just getting to know each other too, right? I feel like just on a lead magnet, the $1 million baby strategy, especially ran with an ad to just project it out.
So that's a free course. Actually, I'm putting together a free course. It'll be in a funnel real soon.
Yeah, that's what I'm saying. I like it. That's what I'm saying. Because I can just see, you know, someone.
I don't have an insurance funnel. Honestly, I don't. I normally. So here's the thing. I prefer relationships. You know, I like to get to know my clients. I like to really understand their goals, and I prefer relationships. And this internet space is just pretty. You know, we have to do it now, right? Ever since COVID, it's like, you know, before COVID, it was like cool, it's cute, but COVID has really shown all business owners that if you're not in the digital space, then you're not growing, right? And you're not going to be able to grow. So that's actually what I was helping financial professionals come into the digital space last year. That was my coaching program. helping them, get into the digital world, running ads, setting up their Facebooks and Google ads and all that kind of stuff. But yeah, I do run ads, and I love that idea. So I'm definitely gonna run.
We'll talk about that. Probably talk about it on the thing. That would be awesome, because that's an amazing lead magnet, and just the title of it is super marketable as well. Right. I can just see you making like, a really great consistent creatives. There you go, and someone's gonna grab that today.
Speaking of,
So let's talk about that. Let's talk about that.
Yes. So my entire brand, I really didn't even introduce myself, but he did for me. Shaniqua Nicole, the Millennial Money Maven, and I help you retire rich and raise rich kids. So that's why I talk a lot about how to help you retire, with insurance, live tax-free, all of that, and then raising rich kids. So my 6-year-old author entrepreneur, Bryce Nicholas, actually wrote this book, ABCs for Rich Kids, and the whole entire idea of this book was for us to start to have these conversations with our children, right? So I think we probably learned the ABCs is like apples, bananas, carrots, right? We're now teaching our children. A is for assets, right? What are assets? Assets are things that you own that pay you money. Think rental property, businesses, and land. We also have an ebook, so that's super dope. B is for business, C is for cash flow, right? So these are financial literacy terms that you can start to open up the conversation to have with your kids, so that while you're out here building and becoming a generational curse breaker, they're not just going to take the money and lose it, right?
So look, I'm gonna give you guys some real context and why this is extremely important and why a book like that is so valuable. On my YouTube, you can scroll down. I talk about how my grandma, when I was 16, she passed away. So I was her beneficiary, right? I got $150,000 at the time, 16-year-old kid.
Wow.
I didn't have ABCs for Rich Kids. I didn't have a mom because she had passed, a dad that passed away. So I blew the bag on a bunch of automobiles. I bought so many cars in a condensed amount of time. And I tell that story on my YouTube. However, I just want to say, if you guys got kids out there, or maybe you don't know the ABCs, it's cool. This information is super valuable. But if you have kids, or if you have young nieces, nephews, cousins, whatever the case, grandkids, whatever situation may be, grab this book.
I really had adults read this book and say, like, "Wow, I even learned something as."
That's what I'm trying to say. Grab that.
M is for mutual funds. N is for negotiation, right? Everything is negotiable. O is for opportunity. P is for private. We got K is for kitty tax. You don't know what a kitty tax is. Go and grab the book. It's at abcsforrichkids.com. We also have the ebook. So,
what I heard earlier, I was on your story. Is there an audio version?
Yes. Yep.
Okay. Yeah, that's what I thought.
Audio book.
That's what I thought.
Yeah. So that's in the funnel. They can grab the ebook. You can grab the ebook. You get a printed copy and the audio book.
Amazing. That's great. So I know you're gonna give one away, but what's the site? I want to drop it here so people can see it.
abcsforrichkids.com.
abcsforrichkids.com. So that's abcs4richkids.com.
Yes, perfect.
All right, here you go. So you guys can grab it. I'm gonna grab one to support 100%. I just need that as part of my library. And if you guys have young ones in the crib, or maybe you're not as versed, get the ABCs.
Yeah.
Get them. All right. So look at it. We got about 7 minutes. I like to honor people's time a lot. Sometimes the other shows, they go beyond an hour, but I want to be respectful of your time. And obviously you have some things that you want to give away to people. If you are interested in winning one of the giveaways, drop your email in the comment section. We're gonna do something live. We're gonna do the wheel, but I want to make sure that Shaniqua can connect with you after. Maybe you can get some information after. So drop your email in there so she connect with you after. I can connect with you as well. So if you're interested in grabbing one of the giveaways. And what are you giving away?
What are we giving away? I know we're giving away. What are we giving away? Ebook.
You're
We
giving away
giving
the Rich Kid
away
ebook. Yep.
a 3-night trip to Las Vegas. So look, this is the thing, y'all. I just love my clients. Like I
3-night trip.
really love my clients. I give every single one of my clients a vacation, a hotel. It's a hotel stay. So it's a hotel getaway. Vegas is like the easiest one, right? Everybody loves Vegas, so I give that away. But I mean, I've sent clients to Costa Rica, Dubai. Like we have hotel getaways all over the world. So depending on the level of client you are, you know,
You're like, yo, level 1 is Vegas. Level 2 is gonna be closer. Level 3 is Dubai. Level 4 is Mars. You know what I'm saying? No, that's
Mars
amazing.
is definitely coming up.
That's definitely amazing.
You want to go to Mars? You interested?
I would go.
Yeah.
Yeah, I mean, I like experiences. I would go.
Yeah, I feel like that's going to be an experience soon, messing with Elon.
I mean, we're about to be in Mars in the metaverse in like a couple months anyway, so.
Oh, facts.
You know what I'm saying? So we're going to be like, oh, yeah, this is cool. I'm gonna get there. They'll probably have an upgrade in the metaverse to get you to Mars for real, in real life.
Right.
You know? Okay, guys, before we jump into the giveaways, and what I'll do is my new book
and the
just
tax
came out
plan.
too.
Did I say I was going to give away a tax plan?
You said you was gonna give away a tax plan, and then I'll give away a copy of my book signed as well. So we'll have 4 giveaways in there. So before we do the giveaway, is there anything else you would like to share, or if anyone has any other final questions, you could drop them in the chat. But yeah, is there anything else you got going on for the holidays or launching or whatever that they can tap into?
Yeah, so before I let you guys know where y'all can follow me, I do want to drop one more bomb on y'all, right? Because we're only like 31 days left of 2021, right? And so here's the thing about taxes. Once you miss the deadline, December 31st, there's really not much that even a tax strategist, accountant, or lawyer can do for you, right? You have to just pay the taxes on the money that you owe. But you have 31 more days to implement. So I want to give y'all a couple gems on how you can save money, right? I know a lot of people ran it up. It's been a pandemic for everybody. So there's a couple ways that you can save money on the taxes that you're going to owe come April of 2022.
All right, so
number one.
Before you start that, I'm going to take some additional notes. So everyone that's on my text community, I will send out some vocabulary words and some top things for you guys to follow up and do some R&D on your own. So I just wanted to let you guys know that. So I'm plugged in right now with the notes.
Awesome. Yeah. So the biggest thing that you can save on is prepaid expenses, right? So if you find yourself right now, you have a lot of cash sitting in the bank. And, we all like to see our cash. I love to see it. It's pretty. But if that cash is looking like a lot of profit for you, you might want to start figuring out how you can prepay some of your expenses for next year, right? So let's say, your accountant is $30,000 for the year. Go ahead and cut your accountant a check. You can prepay for your 2022 services. You can, that's going to be a tax write-off in this year. Or let's say, you have a consultant that you're going to work with, right? Who wouldn't want to get paid up front? You could probably negotiate a discount, right? By prepaying, you can typically negotiate a discount as well for your consultants, your marketing, and especially if a marketing company handles your ad spend, right? So let's say you pay your marketing company $5,000 a month, that's $60,000 for the year. If you have an additional $60,000 this year just sitting around, go ahead and give them the $60,000. And guess what? That's an expense for you now. So next year, as you're continuing to make income, you're not paying them $5,000 a month, but you still can, or you can add that $5,000 to your ad budget, right? So this is called like cash flow management, right? So you want to learn how to manage your cash flow and use it where it's most impactful. And sometimes it's going to be most impactful to spend the money now, especially when you have 31 days to do it, so that it's going to help you with taxes. The second is going to be your vehicle, right? So you might notice a lot of people get new cars at the end of the year. There's a couple reasons they do that. Number one, you get the best prices, period. right? So the companies, the car salesmen, they're looking to get the inventory off their lot, and you get a good deal. And then if the vehicle is over 6,000 pounds, right, you can now depreciate that entire vehicle, right? So you need to, number one, research what vehicles are over 6,000 pounds in gross weight. Okay, that's gross weight, not just regular weight. So you want to search gross weight. And let's say you get $150,000 G Wagon, you can now write off $150,000 in this year, right?
I did
And
a YouTube on that too. That's crazy.
you did a YouTube on that one?
Yeah, that one's good. That's a
Yeah.
good one.
Yeah. So that's two. We're gonna stop that there because I know we at the hour. But yes, if you guys want to follow me throughout the year, I will be hosting your One Business Away Challenge, where I'll be giving you more game like this. I also have currently it's a free community, Money Maven Club. So y'all can head to moneymaven.club to join that free text message community where I send out texts at least once a month. But in the new year, we will be meeting at least once a month to talk about whatever you guys want to talk about, investing, taxes, right? Whatever is relevant at the time. But definitely make sure you guys follow me at Money Maven Club on Instagram.
All right. So with that being said, what I'm gonna do right now. So we got. Let me see who's on. Who's on that I can see because I can't see everybody. So we got Ties in here. I see Fox. This is for the giveaway, y'all. I see Maya. If you're in here, type your name down there so I can see you. I see Ari.
Who's going to Vegas?
Who is going to Vegas? So if you're not dropping your information in the chat, I most likely can't see you because I can see that there's over 10 people in here, but I can't see everybody because it's not like Instagram Live. I can't just see people's names.
Right.
So let me see. I got Reem. We got Jason. Y'all can help me out. Just throw your name in the chat before I spin this wheel. I'm trying to see if anyone else is in that I missed. I may have said something. I got Fox. Okay, comments is coming below. Let me see. Oh, Jorge. Yep. We'll throw you in here. Mark's in here too. Cool. Man, who's going to Vegas for the holiday? So when can they claim this? By the way, like if they win, when could they go?
So you have, I believe it's up to 18 months to book your trip.
Okay. All right.
Yeah.
All right. So 1, 2, 3, 4, 5, 6, 7, 8. I got 8 people. Ty, Fox, Maya, Ari, Jason, Reem, Jorge, Mark. All right, I'm about to spin the wheel. No one else is saying anything.
Let's go. Who's going to win? Listen, you got to be in it to win it. You got to show up, right? You got to show up, y'all.
All right, let me see.
So we appreciate you guys for showing up. Let's see. Reem.
So which one are we giving away first?
Is it a whole package or he just get one?
No, but I mean, because we got the book, we got the Vegas. So which one is this? What price is this?
Reem, you go to Vegas. Congratulations.
So Reem, leave your email below in the comments so I can see that you're on there, and then we can get you there. So I'm taking you out. So this one is gonna be why don't we do the Rich Kids book on this one?
Okay, bet.
All right, so let me set this back up, get the spin going on. Okay, Ari got the Rich Kids book. Congratulations on that. I'm about to take, hold on, let me write this down before I forget. Can you hear me? I think you were muted.
Yeah, I can hear you. I'm putting you on mute on purpose. Okay. Don't worry about it.
All right, so Ari got the book. Reem going to Vegas. All right, and then you said you was gonna do the tax strategy?
Tax plan. So
tax plan.
Let me tell y'all something. The tax plan is really the highest value, right? So our tax plan start at $5,000. So this is the $5,000 value. Whoever gets it, I really hope that it is a great value to you and your business. The whole goal is for me to save you money in taxes.
That's crazy.
So let's go. On
All right.
average, we save people about $22,000 in taxes annually.
All right, guys. So I'm gonna just say, y'all, follow Money Maven Club right now. Like, because if you don't win, you still win. You know what I'm saying? Like, everyone wins. So if you don't win this right now, get with her, get your situation set up, and take advantage of this. All right. So this is gonna be for that tax strategy. Ty, look at that. Look at
All
that.
right, Ty. I thought it was about to be the one before it. Ty, you lucked up.
But Ty got the
Congratulations to y'all for showing up.
Yeah, she got the tax plan. And then I'm going to give a free copy of my book. And these are strategies that I use in real time. And as I was writing this book, the book helped me make $30,000 in September, and I still use all the strategies in here. So it's $47, and you get 5 bonuses if you bought it today, which is still an amazing value. But I'm gonna throw that in the mix today because we're having so much fun today. So this is gonna be the last giveaway. I'm gonna do this last spin. So Chris gets that. Congratulations, Chris.
And everybody's a winner tonight.
Everyone's a winner tonight. So Chris is gonna get a copy of the 8 Secrets. So thanks so much for spending some time with us on Talk Money Tuesday. It's been amazing. It's been a pleasure for me to have you here. You gave away so much value, and this is going to be available on YouTube. So if people missed it, or if you're watching it and you missed something in real time, you want to go back, you can go back and get the drip. The drip is about to be on. You know what I'm saying? Everybody, make sure you follow Money Maven Club. Reem, I do not have your email. So if I don't get your email, we're going to have to spin the wheel again and give Vegas to somebody else. So make sure you drop your email below so I can get in contact with you. Any final words, Money Maven?
Now that's it, guys. I'm Shaniqua Nicole, the Millennial Money Maven. I appreciate y'all time. Y'all could have been anywhere in the world, but y'all here with us tonight. So I appreciate you for being here. Y'all can tap in with me at Money Maven Club on Instagram. You can learn a little bit more about my personal life at ShaniquaNicole.com. And there's also a link on there for you to book a free consultation. I believe my calendar might be closed down for the month of December, but I'll be opening up some just for you guys. So head to ShaniquaNicole.com and tap in. Let's work.
Yeah, and she's going to be on. We're going to bring her on the Honor Pursuit podcast. We're going to set up a time for that. So you get a little bit more intimate details on her situation, how she started her business, you know, how she were able to grow and leverage and just make so many things happen. So you guys stay tuned for that because that's going to be coming up real soon as well. So I really, really appreciate you having you on tonight's pod. I like my other podcast, but I tell you, this one, it just hits very different. Like I like the live situation. I like people being able to ask questions. We give people practical information that they can use right now in real time and change their situation tomorrow. So it's been great. Reem, drop your email if you want to go to Vegas. You're saying congratulations, but I want to send you to Vegas. We want to send you to Vegas. I don't got your email, so drop it below.
Drop your email, Reem. Don't miss out.
Don't miss out. All right, guys. I'll see you later. Thanks a lot, Shaniqua. And
thank you so much, Brendan.
Yeah, you and I will connect soon.
It's been so much fun. Have a great night.